Hey, what is up? It is the 8th of October, and so starting off the S&P 500, the best trade of the day over here was this one right here. It's just the Andrews pitchfork. There's points one, two, three, four right over there, and then what we're looking for is we put the pitchfork on. There's the green line. Price broke above it, closed above it right here. So then we put the Fibonacci retracement on. Price came down right here to 23.6. We got in. Then the hard X was up there, which I should let it go closer. But I was looking at something in the Dow Jones, and so I ended up getting out sooner. But not. What's that right there? 18.75 points right there. So it should have kept it about a little bit higher, by about 4 more points or so before the ultimate. But you can see it hit the 1.146, so that trade is set and done. So real nice, easy setup today for that one. I am looking at, because I put some notes up here. Where is it? So to remind myself, all these right now, I changed the inside pitchfork from 2 through 4 for points 1, 2, and 3, because I found one time in points 1, 2, 3 or 2, 3, and 4 where it did not work. So I'll show you all what 1, 2, and 3 looks like now. And then the shift pitchfork, I am thinking about moving it to points 2, 3, and 4 rather than using points 1, 2, 3. So what it is, it's just an ABCD trade for the shift pitchfork. C A B C D, and how I have been doing it for a while is putting it on points 1, 2, and 3, and then when price breaks it out, that's what you're looking for. You're looking for movement back. That you just put the Fibonacci up here, and then same type of Fibonacci rules applies. Like for this one, for instance, price would have hit the 23.6, and then all the way down really close and close enough to be done right here down to the 1.146. What I'm looking at now is using points instead of 1, 2, and 3, points 2, 3, and 4. And 4 will be kind of subjective. It'll just be where the lowest point is, which in this case is right here, and then when it breaks up here. And so what we're looking for that is same sort of thing. And when price breaks it here going the other way, but in this instance there is 0.4 right there. So that's just going to be 0.4 is going to be where the lowest low is for it. And then you just put the Fibonacci retracement level right there, and then just start dragging it up, looking for the 23.6. Either you look for a 23.6 hit, or for price to go up here and hit the white line at 3.618. That's the exit. In this one, price did come down, hit the 23.6, but hit the white line first. So that one would have been a really nice gain from right there, close to about 30-point gain to SP 500. So that is how I'm looking at moving forward doing the shift pitchfork trade. It wasn't it wasn't working from the other way. It's just that the only way I would take it is if there was a huge retracement from the other way, just because I wouldn't do it on day trade because it can go super high against you. So I'm looking at doing it that way because I think we can do a day trading one that way. All right, Russell 2000, not a lot going on over here. We're still just waiting for the shift pitchfork trade, the original that I had, using points 1, 2, and 3 for it right there. Looking for, take that off there. Looking forward down here to the 23.6 level, which is still, it's just waffling along the 2.618. So still for a longer term time frame, looking for another at least 5.5% drop in the E-mini. I'm sorry, the Russell 2000 right there. So that is basically it. Yeah, I mean, this is really messy over here, so not a whole lot to say about it. So moving on to the Dow Jones, we are in a live trade right here using the new inside pitchfork. You can see here's point 1, here's point 2, here's point 3, and there's point 4 right there. So we put on the pitchfork on point. We got on, yep, 1, 2, and 3. I'll just do it live right here. See what it looks like. So there's points 1, 2, 3. So then price broke out below, so we just draw the Fibonacci retracement level from top down to the bottom, looking for either price to go down and hit this red line all the way down here, which it obviously did not, or for the retracement. So we got the retracement first, like we normally do, probably about 99% of the time, rather than it hitting the first exit. So hit the 23.6, and so that makes the exit the 1.146. But now price went up and hit the 50% level. So now the exit moves to the close of the low, which would be that bar right there. So what I can do, I'm not even sure which one. I think this is it right here. I'm going to move. Actually, I'm going to just leave it right there. You see, I like this for this one, even though the close of the low is going to be for the 50%. I like putting mine where a bunch of traffic was, and as you can see, there's tons of support down over here. See, look, all that buying right there from these wicks right here, plus all the way of that. So even though it may look a little high, you know, from it, it's 67, 69, almost about 70. Ticks higher than low. I'd rather be safe and get out of it right there. So then I'll have my other entries just below 88.6. In fact, I'll move that down a little bit more. 2 at the 1.146, because if it goes up there and hits that, then the exit moves to the 23.6. So I'll have my exit. I think that's the exit I have already set. And then another entry at the 1.146. So live trade right now here in the Dow Jones. So we're looking for tomorrow, either price will just start off going back down, hit and take that off, or we'll watch it pop up to a certain level, not sure how high, and then eventually, you know, this would be kind of like this stopping area I'd be looking for up here. Look for the move back down to the to the 23.6 right there. So that's what we're looking for the Dow Jones going into tomorrow. Going into oil, and oil, all we're doing is looking for a potential trade. We don't have anything confirmed right here, but we do have the potential for the Andrews pitchfork, which I went ahead and drew on here. There's points 1, 2, 3, and 4. So then what we need tomorrow, because today was a huge down day down, which seems like oil has just been doing some massive swings, these daily massive swings, which is usually really good for trading. But yeah, oil has been just popping off one way or the other each day. So what we're looking for is we need price now, since it's confirmed all these. This should eventually turn into a red one right here. If this remains the low and this continues to go up, that will turn red. And so what we're looking for is this. We need you to go up here, price, close above somewhere, just, you know, wherever it closes above the green line right there. And then the original exit for that would be way up here at the yellow line, you know, starts about 86, 81 up there. But more than likely, we would use the Fibonacci retracement levels for it. Let's get a little bit closer on there. The Fibonacci retracement levels for it to, we'd have a entry waiting for wherever the pullback is to 23.6 and look to get in right there. So that's what we're looking for oil. Now, I mean, it's not guaranteed that this is going to come up and you know, go close above it tomorrow, but that is the one trade that I am looking at for oil. Other than that, just like in the Russell, there's not a whole lot going on for it. So we just gotta wait and see what's going to happen. Going over to Nasdaq. Nasdaq today was just a standard extension to extension day. You see down here from using yesterday's highs and lows. Right here, there's yesterday high, yesterday low, up at the Fibonacci levels on. Price opened up, went down, hit the extension low of the day, and then went up, and look at this, finished right up here at the extension high of the day. So that's just an extension to extension day right there. Nothing new. And look, what we're looking for in it is, unfortunately, there's not a whole lot. We do have a potential A, B, C, D trade. So what we need to do for that, for the shift pitchfork, is we put the Fibonacci extension level on, because it has to at least hit the 1.146, which it did. You can see right there, it ticked off of it. All right. So now what we'll do is, well, I'll go put the triangle box on there to signify to look for an A, B, C, D setup right here. A, B, C, and D. And this may move, this of course can move higher. This isn't a set in stone point D right here. I mean, it could go up however long, but eventually when there will be some type of retracement coming down from it, this one right here, point D, will turn into a red point right here. And so since point D measures 1.146 from points A, B, and C, 1.146, that is a live trade. Yeah, because as you can see, look, like from points B to D right there, it's 1.146. So it 1.168. So it's greater than even 1.146, which is that right there. So perfect. So lines up to it. So then what we look for that is put the shift pitchfork on points 2, 3, and 4. And then what we would do is we would look for either more than likely a breakout or the price to close below down here. But for some reason, if this turns red and price would have to move down some. Oh goodness, come on. Price would have to move down some for this to turn red. So say it does turn red right there, then we could play it either way from it. We would either look for a close below here, which we would look for we'd go short. But if the price reverses, we get a red one right there, so it's confirmed the fourth point, and the price goes up here and breaks here to the upside, then we would take the long right there. So we are looking for utilizing this move tomorrow, more than likely to the downside, but could be to the upside. Just want to point that out there as well. And those are really the only I think that's the only really good trade I had seen earlier today. 1, 2, 3. We could have another Andrews pitchfork trade because we have a higher high. So this one after D also would need to come down, break this low right here, right there. So we get a red point up there, and then eventually we'd create a red one down there. So we could have another Andrews pitchfork, but then we'd still have to wait for after that for price once it break that low to move up and break the Andrews pitchfork, which would look like this here. So there's just waiting going on here for it would look like that. So we need to break that black line low down there and then come up and close above that to create a long for that one right there. So the best one we're looking for is a short tomorrow here in the Nasdaq. So oil just waiting. Dow Jones, or wait, was it waiting? What was that? Yeah, just waiting. We got to wait and see if it's going to close above there. Dow Jones, we're in a good trade, good short setup right here. So that's the best setup we're in right now going into tomorrow. Russell, just waiting. And then S&P 500, mainly waiting on this one as well for some things to close. All right, take care. Thanks. Bye.